and welcome to Trading Hour on CNBC TV 18. I'm Ekta Batra and with me is Prashant Nair. Well, it's turning out to be a day of profit booking. So the Nifty is sub 11,000 as we speak at this point in time. And we do have the Midcap index, which is underperforming. So down around 0.8% currently for the Midcap index. The advanced decline ratio, yesterday it was in positive terrain and today it's not managing to sustain that kind of momentum. So we currently have the advanced decline ratio, which is currently on the declining side. A lot of stocks in focus today, and how can we start the conversation without mentioning Tata Motors? That stock down 18% at this point in time, reacting to that massive loss despite impairment which came in. So that stock down around 18%. But other stocks such as DHFL, Indiabulls Housing Finance, all of them from the NBFC space sulking today. So they have been vulnerable, and you can see that kind of playing out today as well. Reliance Capital managing to bounce back after the falls that it's seen recently, and Raymond too, after yesterday's fall, came out with a clarification and up around 7.5% for that stock. A lot of numbers to watch out for. It's not the end of earnings season. Tata Steel, M&M, PPCL are a couple of stocks to watch. Hi, Prashant.
Hi, and I think we've got the Friday jinx going as well, right?
Yeah.
And I think we'll have Nimish joining us in a bit with that, an interesting look back at the past many Fridays and the disasters we've had. And of course, I mean, today's is very clear. It is Tata Motors without a doubt. There is some global...
somebody mentioned, I had put it up on Twitter a couple of weeks ago, and somebody replied back to saying DHFL every day.
That is actually true. Actually true. But, we'll have that with animation just a bit. We've got the market, which is down 70. There is some global stuff as well at the margin. I mean, and news is not very good. And I'm talking about growth numbers out of Germany, etc. We can talk about that in a little bit from now. And I think the market is reacting around the world to those numbers. Essentially, I mean, Germany, in all likelihood, has already slipped into a recession in the second half of 2018. The industrial data numbers from yesterday pointed to that fact. It's the fourth largest economy. It's been doing very strongly for the last 10 years. It's one more evidence that global growth is coming off pretty sharply. All of that in a bit. But let's kick it off, as always, with a quick take on the market. Some trades. Mitesh Thakkar is with us. Mitesh, good morning. Thank you very much for your time. Your sense, how are we looking?
So, good morning, Prashant. The day doesn't look good, clearly, and you've also highlighted the bigger casualty in Tata Motors. But I think what is important is that the Nifty has come back to very important levels. While you were going up 10,965, 10,980 broadly, was a very difficult level for the index to get past. We are back to those levels. Now it should logically act as support. So we have explored some long positions below 11,000 with a stop below 10,960 and looking at 11,100, possibly 11,200, 250 as the upper end of the target area. So for the timing, I think we've used this decline to buy into. But yes, the breadth is a slight concern for me.
Okay, well, considering that the breadth is a concern for you, Mitesh, what would you recommend in terms of stocks? Would it be more short positions?
So I have one sell and one buy. BPCL, I think, and with the crude declining, the intraday charts have reversed on the chart of BPCL. It could possibly give a pullback to about 355. Take that as the target buy with a stop below 339. And Vedanta is showing continuation after a few days of sideways action after that big breakdown which happened. So that's a sell with a stop at 163. Look for targets close to about 152.
Okay. All right. Well, let's get in a couple of Twitter queries now. We have, if we could just get to the Twitter query. Yeah. We have the Twitter query there. 800 shares of Indiabulls Real Estate at 162. Mitesh, what should the person do? Hold or sell?
Sorry, what stock is this?
Indiabulls Real Estate.
IBDL. All right. Okay. So I think the stock has, broadly come down to longer term support areas, but there's no sign of reversal as yet. The only thing which I can suggest possibly is to hold now with the stop below levels of around 55, and you might get a bounce back. I don't think you will get your price back, but a bounce back to about levels of 90 or should be a selling opportunity over here.
Okay, Mitesh, thank you very much. Appreciate you joining in on the top of the show. Tata Motors, let's just dive straight into that one. Big cut, big impairment yesterday on account of JLR. and the stock is down 17-18%. It was down more, much more. I mean, so it's recovered 10% from the lows, 150 rupees. You know, what we'll do is we'll first play out a quick management soundbite, and then we'll have two analysts join in to talk about this one. PB Balaji, Group CFO of Tata Motors, on the call yesterday on JLR.
Jaguar Land Rover, the performance was impacted by corrective actions that you have taken in China, the weak market conditions there, and the production shutdown there. The revenue at 6.2 billion was down 1.4%, and PAT at minus 3.1 billion pounds basically got impacted by the corrective actions that we did on taking an impairment on our assets there. Taken a one-time exceptional charge for asset impairment. This reduces the growth and depreciation and amortization rates by almost 300 million per annum going forward. So it's a right step that we have taken in terms of reducing our costs, improving our break-evens, and as well as ensuring our competitiveness.
Okay, Mahantesh Sabarad is joining us, Head of Retail Research at SBI Cap Securities. We'll also have an analyst from Sher Khan join us in just a bit. Mahantesh, good morning. Good to have you here. Your first thoughts on the Tata Motors results, and what did you make of the impairment and the damage you're seeing on the stock? Briefly, Mahantesh, and we'll have follow-up questions after that. Yes.
So the results have been quite bad. Impairment or non-impairment aside, while the local business, which is a domestic business, has done well, JLR, of course, is facing stress, and it's visible in the way the EBIT and EBITDA margins have been. EBIT is negative for the quarter. As far as the impairment is concerned, it seems to be just a financial re-engineering. We don't know how deep or what furthermore can we expect in terms of impairment going ahead. And obviously the stock price is factoring in all this uncertainty ahead.
Okay. Mantesh, what is your sense? Because the view is quite divergent that, you know, some people are of the belief that maybe Tata Motors would be a stock you should probably accumulate at these levels to assess what the outcome, or to assess, you know, the pickup maybe 2 years down the line. Would you be of that camp at all?
10 years ago, similar was the question asked when JLR was acquired, right? And during that global financial crisis, the stock had tanked along with all the others as well. Tata Motors has tanked furthermore. I think if investors have a short horizon of, you know, and when I say short horizon, I mean 2 to 5 years, probably it will retrace the same path that we have seen. It went up in multiples, but it has super crashed thereafter as well. So I don't think it's an enduring story for really long-term investors.
Mahantesh, you know, I remember this was, I think, one of the institutional brokers, Motilal, who sometime back put out a report calculating the replacement value of the business. I mean, I think at close to these levels or maybe even slightly higher. Do those kind of, I mean, does that kind of a valuation metric help in a situation like this?
I don't know what replacement method do you apply when you have impairment of assets, right? What has essentially happened in JLR is that they've been spending every year close to, you know, on an average 2 billion pounds. Today the run rate is 4 billion pounds in terms of capex. So collectively in the last decade they would have spent close to 20 billion pounds of capex, much of which is in R&D. And if 3 billion pounds out of that is impairment, that's 15% of your spends are useless, right? Or not yielding any sufficient results. So I don't know what kind of, you know, replacement cost will you attach to the balance, 17 billion that they have invested. So for some portion of it is of course recovered over a period of time, but I don't know whether that is really a true metric to assess a stock or a company like Tata Motors.
Is it still possible though that the turn, I mean, I don't, maybe not turn around, but yes, for those who still believe that you know, N. Chandra will focus on this and he'll cut costs, cut capex. They've already done some of that earlier, and stay on making the business profitable. Can all that happen even if this impairment, with the impairment we've seen, which is at the end of the day an entry, right? Accounting entry, and maybe more impairment. Can both things happen at the same time?
Yeah, I think there can be more impairment as well. There is Brexit uncertainty right now. which tells you that the assets that they have within the British geography are not necessarily worth in an event of a no-deal Brexit with a very unfavorable kind of situation. The assets within the UK geography are likely to be impaired furthermore. So you cannot rule out impairment of assets on that account. Number two, we don't know what is the warranty costs. Are they sufficiently provided on the warranties for all those vehicles that are running on the roads right now? Given the situation that you have structurally, automobiles moving to the on the electrification side. If you recall, most of the vehicles sold by JLR are diesel vehicles. So therefore, I don't know whether they are sufficiently provided on the warranty side. And as far as other impairment in terms of R&D incurred so far, we don't know how much of that is further left in terms of impairment. 6 months ago, they said that we are taking fit for future kind of assessment of the assets, and they started accelerated depreciation. And within 6 months, they provided for £3 billion. What happened 6 months ago? Couldn't they see this £3 billion impairment?
Okay. Mahentesh, the other concern is obviously the JLR EBITDA margins, which have been declining quarter after quarter. It currently stood at around 7.8%. It missed estimates by around 200 basis points even for this quarter. So what is your sense only on this particular parameter?
So on the margin front, there are two things that are happening. It's one is the huge amount of variable marketing expenses that they're incurring to not just clear the inventory that they have, particularly in China, but also elsewhere in the world. So that's reason number one. Reason number two is that their vehicles per se have huge amount of discount to competition in China, and that discount is not going to easily disappear. The prospects ahead, therefore, suggest that on both these counts, at least one, which is the liquidation stock or inventory liquidation discounts, will probably will disappear or will ease out. The discount in the Chinese market probably will not ease out so soon.
So what is your call on Tata Motors from here on, and maybe the pecking order that you have within the auto space as well, based on what you've seen this quarter? We have M&M today as well.
So we've been suggesting Tata Motors as an avoid for our set of investors for quite some time now, and we continue to suggest an avoid. So it's not the stock that one should really get into. In terms of automobiles per se or OE manufacturers, the pecking order would start with the two-wheeler manufacturers, particularly Bajaj Auto or some of the others, maybe even an Eicher Motor, because it's fallen far too fast and far too swiftly, despite its outlook being a little hazy. And as far as the other set, including M&M, right now probably will view them positively.
Okay, Mahentesh, it's a pleasure. Thank you very much for running us through what you make of things. So, Mahentesh is saying you could see more impairment. I mean, it's highly possible, and he would not recommend anyone actually buying Tata Motors at this stage. He likes the two-wheelers more. And, you don't have to buy Tata Motors. You don't have to buy anything. I mean, there is the entire market for you. You've got other auto stocks and you've got other sectors and everything. So 149, 150 in Tata Motors, it's down at 18%, 10% off the lows at this point. What are other brokers saying on Tata Motors? I think we've seen earnings being brought down, price targets being brought down. Surabhi is here with all of that. Surabhi, morning.
Good morning, Prashant. I guess you have to be a braveheart and a maverick, right, to try and pick this one off its lows. I'll run you through some of the estimates. One big price cut is coming from CLSA. They have retained their sell call. Their target is 150, which means that they're expecting the stock to go back to its original 52-week low before this morning's price correction that we saw. What are they saying? The margin decline is a lot more than what they were expecting. Demand outlook has worsened both in India and, of course, in the big market, that's China. They've downgraded their EPS estimates anywhere between 2 to 66% over the next couple of years. And they don't see any kind of near-term triggers. Let's move on. DB is a little more sanguine. They're retaining a hold rating, target cut to 175 rupees a share. And they're saying that the operating environment is likely to remain challenging in the near term. and they're looking at a EPS forecast cut of 38% in FY19 itself, another 10% next year. Axis Capital, they have downgraded the stock to a hold. Their target is a little more elevated than the other two. 187 is where Axis Capital is at. Now, they're saying that the P&L seems to be near a trough, but it's a question of how do you pick this, and is this really the right time to look at buying? They say they will get constructive once JLR volumes in China stabilize, and once a lot of these Brexit concerns are behind the company. Last but not the least, we've got Nomura also at 187, and they're saying that free cash flow generation is going to take a while longer. Market conditions in China are likely to remain quite rough. So they're looking at lowering their EBIT margins on JLR, negative 0.3% this year to 3.6% over FY21. So JLR is not getting out of the doldrums anytime soon, is the word.
Okay, all right, Surbhi, thanks very much for that. Below 150 rupees now for Tata Motors. That stock has already lost 17%, majority of it coming in today, this month.